The first chart is a monthly chart on the euro-dollar, and what was interesting for me is that 2012 basically repeated a pattern of trading that occurred in 2010, and that is that buyers were attracted back to the market after a 50% correction of all of the rally between 2000 and 2008. After testing that correction, we've had 4 months up in a row. That's the longest period of improvement in 1.5 years, and positive momentum is still improving. So I think going into Q1, I think that sentiment will continue to improve. I think what we're going to see is a recovery to some of the losses since 2011. So my first target is for a move towards 135 and then 138.49. I'm cautiously positive on sentiment in cable going into Q1. Last year continued a trend of rising lows that started in 2009. And in fact, July's low in this year tested that trend and attracted strong buying interest. Now the result is that 2012 has only recorded 2 months of losses, and that's the lowest number of down months in any 1 year for 10 years trading. So I am cautiously positive on cable. I think as long as we stay above 157, we'll go towards 164.5. Maybe if the sentiment really is strong, we could even go to the 2009 high of 170.44. Dollar yen is probably for me the market that I'm most positive on for the first quarter of 2013. Now at the bottom of the chart you'll see the two indexes I've got there, and what they illustrate is that cumulatively the market continued to post more lower lows than highs. That's a very negative signal. Now coming into Q1 2013, for the first time since 2007, there's a change in that statistical bias. And I'm optimistic that that's already telling us that the longer-term trend in sentiment is starting to improve in dollar yen. Now I've overlaid the history of dollar yen since 1985 with a 20-month moving average. Every bull and bear swing in dollar yen since 1985 has been accompanied by a break of this 20-month moving average. And we're already starting to go through that. So for those two reasons, I think that dollar yen has the potential to improve significantly in Q1. I will be looking for a move toward 90 and then possibly 94. 94 would be a 38% recovery of all of the bear market losses since 2007.